market's been higher as well, with the D's at 68.87, up 41. Let's bring in Oliver Slope. Oliver's with Blue Line Futures. All right, a lot of action happening this morning, but I wrote down a couple of numbers for corn, 480 to 484. Why do we need to keep an eye on this?
That is a big inflection point for that May contract. That represents a 50% retracement from the recent highs to the recent lows, as well as the 50-day moving average. And I think until we see consecutive closes out above there, the bears have a little bit of an advantage here, as that could mark lower highs and potentially lead to lower lows. Now, on the support side of things, 454 to 458 is going to be the must-hold line in the sand for us, a break and close below there. And you could start to see that long liquidation start to accelerate like we saw last week. And we got an updated on that in Friday's Commitment to Traders report. Funds were net sellers of, nearly 118,000 futures and options contracts, and still net long about 220,000. So if we see some of these technical support levels give way, you could start to see some more selling from the funds and long liquidation. And just kind of a broad theme, we're a choppy trade to start the week. We're higher Sunday night, traded a little bit lower in the early morning trade, bounced back higher. So we're all over the place. Money is flying around as their volatility remains high across all asset classes to start the week.
All right, so looking at our 1 month here for the corn market really lays out to us what we've been watching, but I kind of wonder, what about the bean market? Who's driving that bus?
The soybeans kind of falling into support here. 1008 to 1013 for that May contract is going to be the must-hold line in the sand there. Below that, and you're probably dipping your toes back below that psychologically and technically significant $10 level. Seasonally, this is a time of year where we chop around, looking at fund positioning. I guess the good news is that funds aren't overly aggressive long, so it's not like there's going to be a whole lot of long liquidation on that camp. Funds are actually net short about 35,000 contracts there. So a relatively neutral position. I'm halfway optimistic on the bean market, but that optimism is going to be parked in that new crop contract, as I wouldn't be surprised to see acres come in a little bit lighter in soybeans at that big report at the end of the month.
All right, let's take a break. When we come back, we'll look at equity markets and livestock markets too. Market day report continues in a moment. 87.90. Let's bring back in Oliver Slope, Blue Line Futures. Oliver, earlier talking about funds and the row crops. What's happening with them in livestock?
Well, the most recent Commitment to Traders report showed the 6th consecutive week of long liquidation in live cattle. What's important to note about that is the data is only collected through last Tuesday, so it doesn't account for the massive rally that we had in the back half of the week, which put April live cattle $7.62 higher for the week, which was very impressive on its own, but especially impressive when you look at it and look at historical trends. This was a counter-seasonal rally that we saw last week in the face of a risk-off trade in the outside markets. Typically, when you get a stock market sell-off like we've seen in the last couple of weeks, that puts pressure on cattle, but that has not been the case here as of late, which I think kind of underpins the strength that's behind this market for sure.
Well, you mentioned Wall Street, so let's go there. How about Dow this morning has been under pressure. What's happening here?
The Dow's down about another percent this morning. The S&P down about 2%, and the tech stocks continue to just get clobbered, with the Nasdaq trading at around 3% lower. Obviously, as we talked about in the grain segment, volatility is a common theme across all asset classes, especially the equity markets. We're finally making our way into oversold territory, looking at the RSI for some of these indices, and that's about the first time we've been in oversold territory for quite some time. I think you'd have to go back to last July. So maybe there's a potential short-term bottom, but a lot of big concerns and uncertainty around the economy, potential for recession and tariffs. And that uncertainty is not friendly for the market. Eventually, we'll work our way through those headlines, but it is certainly a risk-off trade in those outside markets to start the week.
Oliver, to wrap up, we're looking at the dollar index there, and we've seen it really pull back as of late. Is that something to continue to watch?
Big move lower in the U.S. dollar index last week. I really wouldn't be surprised to see that trend continue. I think if that does continue, that could bode well for some of these commodity markets, particularly looking at the wheat market. I think that could be very friendly as well. And looking at some of the commodity currencies like the Aussie dollar and the Canadian dollar, I think that could be friendly as well if the dollar weakness continues.
All right, Oliver, great to see you. Come back and see us on Thursday. Oliver Slopes with Blue Line Futures. Tammy.
All right.